To find the right answer, let's connect with Mr. Subramaniam S, CFO with Titan, to get his understanding on where the consumer behavior is moving. Mr. Subramaniam, good morning. Thank you for joining us. After a tough May, are we in for a normalized June?
I think it's a little too early to say that, because June itself, the lockdowns have been lifting. I mean, states have been lifting it over the period of time. And as you can see, even I'm in Bangalore, and only essential stores are still open. So from that perspective, I think it is going to take some time. I think our view is that only by the end of June would most of our stores actually get open up across the country. Of course, there are other states where we are already open and revenues have started streaming in. We are doing that. But I think only by the end of June would we possibly see most of our stores actually open. Early signs are reasonable, I would say, okay, in terms of customer coming back. But how much of that is because of a pent-up demand is a little too early to say.
Okay. In the stores and the states where the lockdown was not there and where the lockdown has been lifted 2 weeks ago, have things normalized, or these regional lockdowns also have impacted sales and footfall to stores where the COVID impact was not very high?
No, I think the regional impact, I mean, the impact overall, for example, in the month of May, if I were to look at some of our stores were open, but sales were very, very low because sentiment was poor and people were scared of getting COVID. And more importantly, we saw a lot of death. I mean, and this was this time close to family, close to us. We lost colleagues in Titan, and a lot of us have had deaths in the family. So I think this year it's a little different from last year in terms of sentiment. So I think it is going to take a little time for people to get back to a sense of normalcy. Having said that, if there is an event which is there in the family, like a wedding, people will come and buy if they can, if the stores are open. And to that extent, there may be some element of pent-up demand. But otherwise, sentiment, in our view, at least the discretionary part of the sentiment is clearly going to be a little weak for some time.
Can I say that while in today's omni-channel presence, there are a lot of merchandise which have decisively shifted from from brick and mortar to online, jewelry is one product category where the migration to digital would be very, very hard?
Yes, that is right. Fundamentally because of the ticket size. The ticket size is very high, and particularly if I were to take our own jewelry business, we have Tanishq, which has a ticket size of 100,000 rupees or more. So there you would want, you expect the customer, and the customer does that. They digitally explore the product through our websites, maybe through video conferencing. All of that is done possibly from a digital side. But the transaction finally gets completed at the store, by and large. Okay, by and large. So therefore, in a high ticket size item, you generally think people would come to the store to consummate the transaction. Whereas in CaratLane, which is pretty much, it started as a digital entity, there you would find things a little different because ticket sizes are lower. So, and over the last 1 year, we have seen our online sale, actual online sale, grow quite substantially. While in CaratLane also we have a lot of brick and mortar stores, but we've seen that boost there. But that would still be at far lower ticket sizes. And therefore, as a category, I don't think online sales for jewelry will go up very substantially, though it will keep inching up over the years.
Okay, fair enough. Mr. Subramaniam, let's get your input on a couple of other things as well when it comes to the outlook going forward now and how you're seeing things pan out. hallmarking. At present, about 30% of the gold jewelry here in India is hallmarked, and with now the mandatory guidelines, do you see that coming into effect? Do you expect more market share vis-a-vis unorganized players on the back of this?
Hallmarking is actually effective right now, while the government has given some time for smaller entities. And of course, it's in some districts. It's not in all the districts. Some 250 districts is where hallmarking is now applicable. And the government has also said there will be no penalties till possibly August. This is the circular that we have all read. Now, hallmarking, therefore, and the bigger issue has been that most of the smaller players and the unorganized players are the ones who are lagging behind in getting the hallmarking done. Of course, to some extent, the COVID situation also might have impacted them. But larger players like us, we are ready. The question is, therefore, what is going to happen over this period? Interim period, I think, because of this waiver of penalties, it's likely that the smaller players and unorganized players may continue to sell non-hallmarked gold. But post-August, that would not be possible. So they are given essentially a few more months to get their act together. And that would be an advantage to organized players like us. But it's a short-term thing. I don't think this is going to be a very big game changer. Over a period, I think we would pretty much have a level playing field, because even as hallmarking would ensure that purity levels in the unorganized trade is much higher and people trust that, we also expect that gold rates and making charges to go up to make up for the difference in caratage. So overall, we believe hallmarking would be neutral to all of us. It would level the playing field in a big way.
Okay. How are you looking at trends now in July, in jewelry particularly? Given the way gold prices have been and the sentiment shaping up on a sequential basis, how are you reading things and what's the impact likely to be?
Sequentially, I think July should definitely be better than what we've seen in June so far, because most stores would be open. We are assuming that will happen. So sequentially, it should be better. But are we looking at a year-on-year growth against last year? Perhaps not, because, as I said, the recovery here from the May hit that we all had to get back to a sense of normalcy, we expect it to take a couple of months at least. So I think we would generally get back to a sense of normalcy in the second half of the year, and hopefully from October onwards, provided, of course, there is no third wave and there is no disruption due to any other issue like that. But otherwise, second half, we think we should be back to a sense of normalcy.
As to your fixed cost in the interim, there are rentals, there is staff cost, there is inventory. How do you deal with your fixed cost challenges in this point in time?
See, we started on this program last year, well before even the pandemic hit us, what we internally call the War on Waste program. And we had identified a lot of costs, which we should be optimizing in any case. So that program was done even before, as I said, the pandemic. And finally, last year, it rolled out very, very well. So a lot of the cost initiatives that were taken forward last year continued this year. They are part of our plans and part of our strategy going forward. So from that perspective, a lot of the fixed cost elements we have been focusing and starting to control. Last year, we did get some waivers on rentals because our stores were shut. This year, we may get some of that. We may not be pushing it so much this year because the disruption is not as extensive as it was last year. So to that extent, we will have some waivers coming in. But and secondly, we have to also deal with this situation because you never know when this is going to happen. And we look at multiple stakeholder perspective. And in Titan, we say that our vendors and franchisees and everybody else that we do business with also should go along well during this pandemic. So we therefore support them. We give them grants, we give them loans, we ensure that their business is also sustainable. So from that perspective, I think it's a question of give and take here. And therefore, and we did it quite well last year. The amount of goodwill that you get from something like that is amazing. And you recover much faster than you would otherwise have recovered. So from that perspective, I think those initiatives will continue this year as well. And I am hoping that we get back to a sense of normalcy as quickly. The biggest advantage this year is the vaccination. With the momentum now picking up, we think by September, October, a sizable population, at least adult population, would have got at least one vaccine. And that should possibly be the game changer this year.
So the big season, which is Diwali, Dussehra, festival season, how different you think this year will be from last year? Last year, everything shut down. So there was almost no sales, no purchases, no transaction virtually for 3 months. This year, that is not the case. So do you expect a V-shaped recovery? Do you expect a W-shaped recovery? How will this year be different from last year?
You're right. Last year, we did get a V-shaped recovery. It was pretty fast. It came back very, very quickly. By the third quarter, that is the Diwali quarter, we were actually growing last year, right? As a division, we were growing at the company level also. This year, I think we will grow, but only in the second half. I think the second quarter, which is your July-September quarter, may be a little flattish. It may not grow as fast as it did last year. And this is coming only from the perspective that we have seen too much of pain this year. There's been a lot of death. So I think the sentiment could be low. I may be wrong because early indicators in June are fairly decent, but we don't know how much of that is just pure pent-up demand for weddings and so on. So, but overall, I think sentiment may be a little weak, at least for the next 2-3 months, till people get vaccinated and things start getting back to a sense of normalcy. If that were the case, I think Diwali season this year could be as good as it was last year.